here with Jeremiah. For anybody who does not know who I am, I'm Alfyn G. I'm your local realtor here in Reno and Sparks area. And we're going to dive into like talking about this question that I get asked a lot. I mean, in every season, but I feel like it's been popping up a little bit more even now. So, yeah, before we dive in, Jeremiah, go ahead and introduce yourself for anybody that does not know you.
Yeah, I'm Jeremiah with Guild Mortgage, and I do all the financing.
Sweet, sweet. And he
Woo-hoo.
services Nevada and California.
Yeah, entire state for both. So wherever you're buying in those two places, we can do your home loan.
And for anyone that's wondering why I have a house behind me, that is my listing right now. It's out in Vecchio, very top, very pretty, has a wonderful view of the mountains. So if you're interested in seeing this beauty, let me know. It's really cute,
Yeah, I like the blue.
right?
It's
It
nice.
looks small, but it's huge inside. So you got you got to see it in person. So
Large
let me know.
interior.
Yes.
Perfect.
All right.
Uh,
So the question that I wanted to dive in today is should we buy now or wait? And how doing as a buyer in our current market?
Yeah. So I mean it's hard, right? Because everyone follows the news and like whatever's, the media is releasing and all these different things, right? But the actual answer to that question of when you should buy or when you should not is just really dependent upon your time of life, because the market is what the market is. Rates
Mm,
are what they are, home prices are going to be what they're going to be, right? But right now, in this particular market, and the market can change literally from like week to week. Like let's just say next week interest rates dip, a pretty decent amount, then all of a sudden I know that we would see buyers jump in and try and get pre-approved and showings go up and all these things, right? But if rates continue to go up like they have been, then it'll probably kind of just stay the same. So like everything
mm,
can change literally overnight sometimes. But right now, what we're seeing is that because of the interest rates and what's happening in the world and the politics and da 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 da, that homes are sitting for a little bit longer than we would normally anticipate. And as a result, buyers are able to get some decent deals, in terms of like price reductions or credits or repairs done or whatever it is that you would obviously be able to have more insight on. But that is a really great tool to kind of think of. Like, can you afford it? Are the numbers working? And then what, if that all works, does the payment and all that stuff look like for the homes that are active like right now? And if that works, then it's a good decision most of the time.
yeah. Cause I just sat with a buyer recently, just kind of inquiring and seeing their options. And the question was, well, I mean, I've heard economy's dipping and I've heard maybe rates are going to go down soon, but how long are you willing to wait? Because really, if you think about it, just looking at data, houses have been going up. So, yeah, if your rate dips a little bit, how's your home prices going to be in a year or 2 years from now? So that's
Yeah.
something that you would definitely want to consider. And then I've also told my current buyer, um, hey, let's taking the rate out. Are you going to be comfortable with that monthly payment? Because this current buyer out in South Reno, renting out a townhome, they're paying over $3,000 a month for a
Mhm.
2 bedroom. So for that amount, we can get you in a single family home. uh, you
Yeah.
know I mean, depending on location and size and year, but it's possible and it could be yours instead of paying 3,000 for what.
Well, I think when you like, if you have any people in here, right, that are very analytical, right, instead
Hmm.
of taking like the emotions out of everything, like if you just run the numbers from, and I just did this for someone very recently, if you run waiting 2 years, and let's say home prices appreciate an average of 4% every single year. So in the next 2 years, your home value, theoretically, the cost of the home should increase by roughly 8%. So
Hmm.
over the next 24 months, you're going to pay 8% more theoretically, sometimes more, sometimes less, for the same home today, right? And does that make sense if you run it in comparison to what the potential rates could be, which we don't know for a fact, right? Because we didn't know COVID was going to happen. We didn't know that the
Mhm.
government was going to increase rates the fastest they have in like almost 50 years, right? Like there's so many crazy things that happen that were not predictable overall. So if you run the numbers and we know that the home price is going to be more, theoretically, if you run the rates, everything is more expensive if you
Mhm.
wait 2 years, even at a lower interest rate by, let's say, 1 or 1.5%. But what people forget about is that the market doesn't always just go down, just like it always doesn't just go up. Like it'll go
Yeah.
down, it'll go up, it'll kind of move sideways, right? And so if you think of that, you can find pockets of time where you can refinance theoretically, or maybe
Mhm.
sell at a better time than you thought was possible, because everything changes, like I said, overnight. So if you wait, you almost ultimately pay more than if you would have
Mhm.
bought now and just refinance theoretically later, right?
Yeah, absolutely. And then my question to you is, Jeremiah, so you work with a buyer, right? How often do you touch base back with them? Like, let's say the rates did dip a little bit. Do you reach back out after a certain amount of time? Like, hey, it's time to refinance, or it would be a good time to refinance now. Do you do that? Or how does your process look like?
Yeah, no, exactly that, essentially, right? So like let's someone, says they buy a house, right? And then let's say in, 6 months or 12 months, however long it is, that a refinance might make sense. We have a whole
Mhm.
system, at Guild, but also we monitor it every single day. So it's like we know when the moment might strike, and then we would just keep you updated. So I have a lot of people that are sitting on like a refinance watch list. And so when those, kind of little parameters start hitting for those specific loans, then we get notified and we can reach out and that kind of thing. But if you were not to purchase, right, and you're just shopping and interest rates change to where it might make sense and you've been on the fence, then it's the same kind of idea as well, you know?
Okay. And then for anybody wondering right now, that's just tuning in, what are rates standing at the moment, and do we have any room to for it to go down or up? And I know from last live you kind of answered it a little bit, but for anyone that's new to watching us,
Yeah.
what are your thoughts with that?
No. So if anyone wants to really see like what the average national interest rate is, there's a really great website called Mortgage News Daily, and you can pull
Yeah.
up mortgage rates, and it'll tell you what is going on as a national average. But these can be a little bit misleading. So like today for just a normal 30-year loan is about
Mm,
6.75, and FHA and VA loans are around like 6 and 3/8 or so, so just under 6.5%. So that's a national though. So that doesn't mean that necessarily that your rates would be those. They could be lower potentially,
mm,
or they could be higher. And so I usually
sure.
tell people to estimate about a 0.5% difference. So if the rate was 6.75, it's probably around 7 to 7.25 without any cost before we talk about buy downs.
There you go. Because I know at that, like, going to that point, people are starting. You're starting to lose people a
Whoa.
little bit. Like, what is
Whoa.
that? What is that now?
Yeah, we can't go too far. But yeah, so they're around like let's just say 6.5 to 7.25 today.
Yeah. And so, if when somebody is comparing lenders, right? Should they only be asking what's your rate, or what else should they compare?
No, and I think being a lender myself now for almost 8 years, like I have realized that in the lending industry, if someone calls and they're like, "What is your interest rate?" It means that we know very little information most of the time about how the
Mm,
process works, right? Because there's so many different interest rates and there's so many different loan programs. And if your credit score is a 759 versus a 760, that'll impact your interest rate versus like
mm,
also if your home is a condo or a manufactured home or multiple units, or if it's an FHA loan or a VA loan or a DSCR, like all these different things impact the interest rate. And so when we think
mhm,
about what is important with the lender, if you're comparing just like I don't know, whoever to whoever, like Chase Bank to to Wells Fargo, those institutions are bigger companies, right?
Mm.
So those loan officers are paid typically a salary, and they get like an hourly rate, maybe a little bit of commission on those deals. But oh, I got really small. Hello. But if we compare um, my type of role to like a Chase Bank or something like that, we are typically commission only, just like your real estate agent is. And so we have a lot more skin in the game to make sure your loan goes well, that you're fully pre-approved, right? That we've looked at all your information, we've reviewed your documents, we've gone over all the numbers, so you're fully prepared. So in addition to just rate and what it costs, there's so many more elements to making sure that you pick the right lending team, because I can't think of another product or anything that you'd be purchasing that costs as much as a home.
Mhm.
So you want people that know kind of what they're doing versus someone that just works at a bigger institution and is just moving things along. So those are the questions I would ask, is like, what hours do you work? Like, what is your like, typical customer service rating? Like, do you work weekends? Like, if I
Mhm.
have a question, can I text you? Like, how quickly can we get, in contact with you? Like those kinds of things are would be what I would want to know if I was a buyer.
Absolutely. And those are very important because, sometimes, I don't know, sometimes it's like we want an answer like fairly quickly. Like if
Yeah.
we have a motivated and willing buyer right then and there, it's like, okay, who can we chat
Yeah.
with that could give us that answer. So really great points there, Jeremiah. Another thing that a lot of people still tend to think is that they need to just keep saving because they need that 20%.
Hmm.
So I've just gotten questioned about that. It's like, I'm not ready, I don't have funds that's at least over 20% so I can be good. And what people don't realize is you may not need 20%, right? There's different loan options, and I'd like you to kind of guide us through that as far as deep down payment assistance, conventional, FHA, VA, why you may not even need the 20%.
Yeah, so good question. So every loan out of the four, right? If there's a VA loan, a conventional loan, FHA, USDA, all of those loans have mortgage insurance besides
Mm-hmm.
VA.
Mm-hmm.
So FHA, conventional, and USDA carry it. And what is it basically? So back in the olden days, if we go back to like, I don't know, the 1900s, if you will, when we were born, um, it'll tell us that traditionally you wanted to come in with 20% because that was just
Mm-hmm.
kind of the standard kind of idea, because then you didn't have to pay this excessive fee called mortgage insurance, and it was much more
Mm-hmm.
expensive. Nowadays, over the last probably 20, 30 years or so, 40 years, mortgage insurance has become much more affordable. And so now, looking at an FHA loan or USDA or even conventional, it's maybe like 50 to 150 bucks a month overall. So if you think about, okay, on a $500,000 house, 20%
Mm-hmm.
down would be $100,000. Like that's a crazy amount of money versus
A
3
lot.
to 5% down, which is 15 to 25,000, right? So you can
Mm-hmm.
use down payment assistance programs for FHA loans and VA loans and conventional and USDA to cover your down payment, and the trade-off essentially is that you pay a small fee every month, right? 50, 100, 150 bucks a month, but then you
Mm-hmm.
can take your money and put it somewhere else, right? So I would
Sure.
say most people don't have 20% down, right?
Mm-hmm.
And there's no, if that was the requirement, then I feel like no one would buy houses, or very few people, right? Because
Yeah.
it's not common.
Mm-hmm. Yeah, so anybody that's watching now or later, we just want to, you know, eh, give that information out that you don't need that 20%. You don't need that 100,000, $80,000 unless you're wanting to go into a different route, like investment.
Mhm.
Like, okay, now I have a house. I want to go and invest in another one. Then Jeremiah would look at your profile and possibly look into what DSCR loan or like a conventional loan. to where you would have to put a higher down. But that's another option. But if you're a first time home buyer, we can look at options like what Jeremiah say, where you may not even have to. So
Yeah, I mean, there's people that get into homes with no money, right? Because they use a down payment
absolutely.
program and
Mm-hmm.
sellers cover their closing costs. That happens in a market like right now pretty often, depending on your price point and all these things, right? So,
Absolutely. So, let us know in the comments if you're a first-time home buyer, if you're a VA, or are you saving for a down payment, or do you need to
mhm.
sell before you buy? Put it in the comment below. We'd love to know. We'd love to chat. We'd love to give you some feedback. What is your best route and best plan moving forward? Because you never know. You may not have to wait that long to make your next best move. So, if you have any questions, definitely let us know. But yeah, I what I tell people is don't disqualify yourself before even talking to somebody like Jeremiah.
Yeah, I mean, I think of it like if you were to break your leg, you wouldn't just go to like ChatGPT and be like, what should I do for my surgery on my broken tibia
Mhm.
or whatever, right? So, like, it's the same thing with your mortgage. Like, you can't figure it out really on your own. And so, I think it's really important that you meet with a professional, just like a real estate agent to help you out, like Alfyn.
Absolutely. And I'm here to definitely give suggestions, always giving options, as far as like, hey, here's option one, two, and three based on what you're seeing, which one do you like? And I'll explain, okay, this may not win your offer, this may win, and this is most likely to win, and that's kind of how I present things. And sometimes it may take a couple times before we get into a groove in today's market because there's different price points and areas that are very competitive out there. So, it's okay. It's okay to be patient. A lot of buyers tend to not. But the first thing I always talk to my buyers in the beginning, like, hey, if you're open, this is gonna this is gonna feel so much better if you're just open to learning, open to this journey, because I get it. It's frustrating and it can be stressful for sure.
Yeah, only make offers on homes that you are 100% wanting to get into.
Absolutely. Well, yeah. So, like Jeremiah said, there's homes that are sitting, and then there's also homes that are flying, but they're very specific. They're probably really priced right or located very centrally.
Yeah. Yeah, they've got good price, good location.
Good
And as
location.
a first time buyer too, you're not going to get everything you want most of the time, right? Like you get price, location, and then what's the other one? Condition, right? So like
Mm-hmm.
out of those three, usually you're sacrificing one. Right.
One.
So if you buy a home that's not in the greatest or the place you wanted the most, right? But the price and the condition are good. Or maybe you take on a home that's in a different location that you'd like, but the condition isn't great, but the price is great, right? So there's so many things that go into it, and a lot of people have to remember that you're going to typically buy 2 to 3 homes in your lifetime. So your first home is not meant to be
Yeah,
your
your
first
dream home or forever home.
and why would you want it, right? Like you're, let's say, 30
Yeah.
years old and you're going to live in this home for the next 50 years. Like you're never going to move again. Like you most likely you're going to move, right? So I think we have to remember that.
Mm-hmm. It happens, and it's just data too, like what
Yeah.
people typically normally do. Okay, so one other thing, we have room for one more, and something I wanted to tackle, and it comes up a lot. What is a pre-approval and a pre-qualification?
Mm. So a pre-qualification is just me believing everything you told me. So if you told me that you worked at Pizza Hut and made $250,000, that could be a pre-qualification, right? But if you
Mhm.
verify it with documents like pay stubs and W-2s and bank statements, then that becomes a pre-approval because we've reviewed your documents. And then after that, you have underwriting, and that's
Mhm.
the golden standard, if you will.
Absolutely. And then, okay, so we covered pre-approval and pre-qualification. We have one more. I lied. Let's talk about earnest money deposit because that's kind of like the next step also, and people tend to not know what EMD means, earnest money deposit. So, just to anyone that's wanting to get into that journey, when we get to that step and I'm talking to you about EMD, earnest money deposit, that's just good faith money, right? It's just
Mhm.
showing how serious we are as buyers with that property. Like typically, we'll standard is 1,000, but the higher it is, then the more serious it kind of gives, as far as like, okay, these buyers are serious. And why it counts is if you're in like a multiple offer situation, let's say.
Yeah.
So the higher your EMD is, then you're most likely like the seller would lean towards too, because oh, they seem very serious. So
Yeah. Think of it
what are
like
your
skin in the
thoughts?
game, you know?
Mm, mm,
Like, if you make an offer on a $500,000 house and your earnest money is $500, right? Like,
mm.
but then someone else makes an offer and their earnest money is $5,000, or $2,500 or $1,000, like that just shows that you most likely are more committed to making this whole process kind of go through. Because if something goes wrong during that transaction, right, and you're out of all these contingencies, that is the money that the sellers, are hoping for if you back out too late, kind of thing, right? So
Oh,
that's the idea.
absolutely.
And then people don't know, I should say, that it goes towards your down payment or closing costs. So
There you
people
go.
do forget that if you put money into that through your good faith, your earnest money, it does go towards your mortgage scenario.
I love that. Okay. So I know it's a lot of information, and that's why we come on every week to kind of like, do a refresh for anybody that's been thinking or know someone that's thinking of jumping in the market, buying or selling. We're here to be your resource. So if you do know anybody, just go ahead and drop in the comments below, or if you have any questions, drop it in the comments. But other than that, we'll see you next week.
Yeah, see you next week and happy birthday.
Thank you.
Okay.
All right. Well, bye, guys. Woo!
Bye.
Let's celebrate.
Celebrate.